Now, yesterday, the Bank of Canada had their fifth scheduled rate announcement of the year. This was the sixth consecutive announcement where the Bank of Canada has not changed their rate. They've left it exactly as it is, which is no big surprise. This is exactly what everyone was expecting. In fact, not a single economist was forecasting a hike yesterday. So exactly what was expected, so no big surprise there. Rate will remain exactly where it is. Bank of Canada rate remains at 2.25, which means that prime rate remains at 4.45. Now, Bank of Canada, of course, needs to be cautious with any movement. And just to be clear, downward movement is not expected. But things that are on the Bank of Canada's mind, as always, is inflation, which has jumped up to 3.2% year over year, which is the first time it's been above 3% in more than 2 years now. Now, this is primarily due to rising gas prices, which is directly tied to the conflict in Ukraine. You've heard me talk about this many times. We all know that gas prices are a lot higher because of this war and the constant closure, opening closure of the Strait of Hormuz, which is the main channel for the oil tankers to move oil out of the Middle East. So of course, when you create this issue, that affects supply, and when supply is affected, that pushes prices up. So that's why gas prices are so higher. And of course, gas prices affect the price of everything else. Everything requires shipping, which requires gas. So that's why gas is such an important commodity. Now, there's so much uncertainty out there, and that's why we really don't know what is going to happen with rates. We can, of course, forecast. This applies with economists as well. They can just forecast based on the information that they have available today, but that can always change depending on what's happening, primarily in the Middle East. A major geopolitical conflict like this can really create havoc for mortgage rates, for inflation, for the economy in general, which is why this is something that's watched so closely. We have more talk about tariffs now. These are all things that create so much uncertainty out there and can influence any Bank of Canada forecast. It can influence what not just what the economists are forecasting, what the Bank of Canada is looking at. They watch all this very closely as well too. Now, if we look back in 2022, and you've heard me talk about this before also, at the beginning of 2022, the economists were forecasting hikes of 1 to 1.25% by the end of the year. But then the war in Ukraine broke out. That caused a significant disruption to the supply chain, which resulted in a large spike in inflation, which in turn drove the Bank of Canada to increase their rate by 4%. It was expected 1 to 1.25. We got 4% plus another 0.75% the following year. Now, will this happen again? I would say very unlikely, but in the financial world, anything can happen. We always need to be prepared. And that's why if you are considering a variable rate mortgage, you have to be prepared for this uncertainty. You have to be prepared that the rate may increase more than what's expected. Of course, it can always decrease more than what's expected. Right now, it's not expected to decrease. I just want to make that clear. All the forecasts are pointing to hikes from the Bank of Canada. Now, again, anything can happen. Next week, 2 weeks from now, 2 months from now, we could be talking about something very different, but now this is the way it is as of today. So the next move from the Bank of Canada will almost certainly be a hike. The only bank that is forecasting a hike by the end of 2026 is Scotiabank, where they're forecasting a 0.5% hike in the fourth quarter of this year. The other banks are waiting for 2027. We also have TD and BMO, who are not forecasting any hikes or any movement through to the end of 2027. Now, that can always change. RBC remains the most pessimistic of the 6 big banks, and they're forecasting 1% hikes in 2027, which would be 0.25% in each of the 4 quarters. That's what their forecast is. Now, these can always change. The forecasts have been relatively unchanged from the beginning of the year, so they've been fairly consistent. They have not changed much. So we'll see how that unfolds moving forward. It's always nice when they are right, but we cannot count on them to be right. It's kind of like a weather forecast. We look at the weather forecast, we go by that. It's all we have to go by, but it's always changing. Sometimes they don't even know what the weather's going to be the following day. I remember seeing them calling for 100% chance of precipitation tomorrow, and it ended up being a bright and sunny day. So you never know. Rate quoting and rate forecasts are very similar to the weather forecasts. So we have to look at that. Right now, the lowest 3-year fixed rate is sitting at 3.89% for an insured purchase, and for some insured transfers, but mostly it's going to be for insured purchases. The lowest uninsurable 3-year fixed rate is 4.04 with a maximum 25-year amortization, 4.09 if you want to go to 30. Now, these rates, again, can always change. These are where they are right now. Depending on your situation, rates can vary. So even on some uninsured files, there are still some 5-year fixed rates that can be done as low as 3.94, 3.99, again, depending on your situation. The lowest insured purchase for a 5-year fixed is 3.89%. On the uninsured side, it could be as high as 4.24 up to 4.29 if you want a 30-year amortization, but there can also be everything in between depending on how much equity you have, depending on closing date. There is a lot of different variables that come into play when quoting rates. So that's why if you want to get an accurate quote, if you've got a purchase closing within 120 days, if you've got a mortgage coming up for renewal, reach out to us at info@pmtmortgage.ca or call us the old-fashioned way, 647-368-5009, and one of our talented account managers will let you know the absolute lowest rate that you'll be eligible for based on your specific situation. We are very serious about getting you the lowest rate on the market, so we take great pride in the offers that we have. We also take extremely great pride in the level of experience and the quality of experience that we provide to our clients here at PMT Mortgage. We truly do care about you. We advise our clients as if we were advising our own family, so you can expect the same advice from us as we would give to our own mothers if we were advising them on our mortgage. And that's basically how we've operated right from the beginning, from when I started in this industry almost 20 years ago now. Bond yields, you hear me talk about bond yields a lot and how they're the primary influencer of fixed mortgage rates. They've been relatively flat for the past 10 days. They're up a bit today, but that's just regular market movement. So fixed rates are relatively stable. But again, with all the uncertainty out there, that can shift at any time without notice. There could be a downward trend in rates and bond yields, and the very next day there could be a piece of news that creates an upward spike or a large downward spike. Of course, we always hope for the downward, but we never know what's going to happen. It's full of uncertainty right now, and all we can do is watch and go by what we have available today. So if anybody has a purchase closing within 120 days or a mortgage coming up for renewal, reach out to us now. We're going to advise you like your own family, and we will let you know the absolute lowest rate you'll be eligible for. And we love advising people and helping them with their mortgages. It's what we do. It's what we're passionate about. I write a blog every Wednesday on the same topic, so you can check that out at easy123mortgage.ca/blog. Hopefully everybody is coping with this fog and smoke from all these Northern Ontario fires. Assuming you're in Ontario, in Toronto Harbourfront, it is pretty smoky out here today. I'm staying inside in my boat. It's nice. I prefer to be outside, but hey, Thursday I usually work from my boat, which is why I'm here. It's not a bad area to be working from.